Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is November the 19th, 2024, and I want to talk canola today. Canola is making me excited. I'm starting to feel very good about canola, and I hope that you are also. Now, it hasn't always been this way. It's been in quite a downfall for the last couple of years, I guess it has, in the last 2.5 years, going on 3 years, but you will recall back in September when, let's just say there was people out there. I'll say there's people out there, organizations out there, groups out there who are suggesting that you sell your canola in September because the price is going lower. And what I did is I published in September, I brought attention to the importance of the 200-month moving average and why it has acted as a significant level of support in the past, and suggested that we should be aware that it could happen again here this September. Now, you can look at this purple 200-month moving average, and you can see how significant it has been. Really from 2008 onward, has acted as a level of support, bringing in buyers, and we saw that 200-month moving average get tested back in September, and that's why I brought attention to it. It's been an important level in the past, and it might be again. And take a look at this candle on the September candlestick here. That's I guess that's probably a hammer candle maybe, and that's a bullish candle. And you can see how the opened up at a high and the sell off throughout the middle of the month, but then it closed back towards the high and formed that candle body at the top of the candlestick. That's what I consider a bullish candle. Now take a look at this another setup here too. We almost would be having an inverse head and shoulders here. Maybe if you can use your imagination, maybe we see a left shoulder here, the head, and a right shoulder. And, if that's the case, then I think we can be, bullish canola above 660. And we've talked about that 660 level, how important that has been and is likely to continue to be. Let's look at the weekly nearby chart. Again, we're using January as the contract price for the month here. I'm just going to kind of fix my moving averages here, my template, and I'll get rid of this MACD and the RSI and go to the weekly nearby. And you can see our moving averages here. The price is trading above these moving averages. The green one is the 50-week moving average, and you can see how important that has been in the past. And it's a very important one for me in all my analysis. I like being above a 50-week moving average. I love being above a rising 50-week moving average. Well, the moving average is not rising, but it's starting to flatten out, and we could see that happen in the future. I can perform that calculation, but I won't here. Our shorter term moving averages, the pink 10-week and the blue 20-week, are below the price also. So again, this is maybe another better look at a inverse of the shoulders, left shoulder, head, maybe a right shoulder. Maybe we get a pullback, lower. And, but I really do think that we get above that 660 level, then I think we need to really become bullish. I do think that this purple 200-week moving average will get retested at some point. It's starting to flatten out, maybe even starting to decline. And that's telling me that it's getting ready for a retest. So we'll see what happens. We got to get above 660. But I tell you, it's starting to look good. Let's look at the daily nearby chart also here. The daily nearby chart is, looking good too on the shorter term time frame. We're above a rising 200-day moving average. Now, that's where we want to be. We want to be above a rising 200-day moving average. The green 50-day moving average is rising overhead. It's going to come in across the 200-day in what they call a golden cross. Now, I don't put a whole lot of weight into the golden cross or death cross, but other people do. So if the price is close to that level, that crossing point, when it happens, it's likely to have some positive impact on the price on this chart. We'll see if that continues. The pullback has brought us back below the 10-day and 20-day moving averages here, represented by the pink and the blue. But you know what? Maybe we have a greater pullback ahead. This could be a left hit, shoulder, right head, and maybe forming a right shoulder here, and maybe we see a move back down to the 600 level, which would not surprise me. Come back down, test the test the 600 level and before we move higher. But, right now the chart is telling me to be bullish on the longer time frame. Now, I want to show you my Saskatchewan price chart, but first to talk about the sentiment. And I'm actually neutral. I'm bullish on the longer time frame, but I'm neutral in the short term because I need to make higher highs before I become bullish. If I make lower lows, then I become bearish on the shorter term time frame. But right now I'm in a neutral sentiment. Now let's take a look at our member area in our website, and you can see my sentiment is just that. It's, we're neutral in the 1 to 2 weeks out, and then bullish after that because we're trend followers. So, we're above a trend and above our moving averages that are rising. We need to be bullish if you're a trend follower. If you're not, well, good luck with that one, because trend following is the easiest, most effective way for you to make money in your grain operation as a trader and as a exporter importer. I'll scroll down to these charts here, and this is my weekly log chart using the Klarenbach price index for Saskatchewan canola. And, we're seeing this inverted head and shoulders, maybe a left shoulder ahead, forming a right shoulder. This trend line often gets retested upon the breakout. Now, we got a retest here, but I don't know if that's enough of a retest. It might be. And if that's the case, then, it's great news. But I would not be shocked if we come down and test this trend line again. And hopefully we can identify some risk management strategies if that looks like that's going to happen. Maybe we short some futures contracts or something, anticipating of that move down. But right now we're still in a bullish stance, but we need to be aware of this possibility happening. And we'll take a look at this weekly chart again here too. This is the linear chart. You can see the equal increments on the y-axis, and again, we're above our moving averages. We're above the 10, 20, 30, 40, and 50-week moving averages. You have to be bullish. You have to be bullish on the longer term time frame when we're above those moving averages. But let's stay tuned, see what happens. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.